Hello, my name is Max Cooperman. Welcome to another edition of CMS Forex News. Today is Friday, May 30th, 2008. In Japan, annual consumer prices in the Tokyo area were up 0.9% for the month of May, beating expectations. Excluding energy and food, prices rose 0.1%, meeting expectations for another flat reading. National consumer inflation, which lags the Tokyo index by 1 month, saw inflation come in lower than expected for the April period. Headline annual inflation cooled from 1.2% to 0.8%, while the core rate was 0.1% lower. Japan's unemployment rate increased to 4% in April. Firms are scaling back jobs just as more people are entering the workforce to make ends meet. So far, households have cut back their spendings to manage. Spending was down 2.7% in April compared to a year ago. The figure undershot expectations. Industrial production declined for the second straight month in April, though the 0.3% decline was better than expected and was a big improvement from the 3.4% drop in March. Manufacturing PMI for May declined to 47.7. It was the third straight month of contraction and a 6-year low. German retail sales declined 1.7% in April compared to March and were 1% lower than April of last year. The monthly fall surprised forecasts on the downside, and March's figure was revised heavily down to show a 2.2% decline. The flash estimate of Eurozone consumer inflation showed the annual pace rising to 3.6%, matching March total, which is a 12-year high. The unemployment rate for April remained at 7.1%. The Euro-Yen pair has been rather choppy the last 4 sessions. In the overnight action, the yen gained, especially following the German sales data. The euro recovered, however, and managed to set a new intraday high in New York trading towards the top of its recent range. In the U.S., both personal incomes and spending were up 0.2%, matching forecasts and slower than in March. U.S. consumers, just like in Japan and in Germany, are feeling the pinch of higher prices and are spending less. Consumer inflation in the form of the core PCE price index was rather tame, coming in at 0.1% for the month and remaining at 2.1% in annual terms. The Chicago PMI showed some improvement in manufacturing. The index rose to 49.1, but remained in contraction for the 4th month in a row. In a separate release, the revised version of the UMich consumer confidence for May saw a slight increase from its preliminary release. The 59.8 reading is still 2.8 points lower than in April and is a 28-year low. The euro-dollar pair dipped to a low of 1.5460 following the German retail sales data, but found support after the high Eurozone CPI data. From here, the euro climbed around 80 pips as US data was underwhelming. In Canada, GDP fell 0.2% for the month of March, making 2 months in a row of negative results. The end of the first quarter saw growth fall 0.1% and the annualized rate coming in at a meager negative 0.3%. The weak report may force the Bank of Canada to lower rates in the next meeting, perhaps even by 50 basis points. Canadian producer prices rose 1.4% on the month, higher than expected, with the raw materials index up 5.1%. Prices were pushed up by rising petroleum and coal costs. The US dollar-Canadian dollar pair jumped in a greenback favor following the GDP data. From a low near 0.9870, the pair moved up above 0.9970, a change of 100 pips before pairing some of those gains. For the week, the greenback is poised to finish stronger. In the previous 2 sessions, the Euro-Canadian dollar fell around 360 pips. Today's combination of weaker Canadian GDP data and stronger European inflation led to a 150 pips rally. The rally paired about half of the losses from earlier in the week. Next week, we will be full of fundamental data, with the highlights being interest rate decision from Australia, New Zealand, the UK, and the Eurozone. This wraps it up for the week. Join us again on Monday right here at cmsfx.com.